Greetings, everybody. Welcome to the Weekly Economic Update. It is Monday, October 31st, 2022. Hope everybody's having a fantastical day out there. It is Halloween, and it is a beautiful day here in Colorado. Sunny skies. It says it's 60 degrees here at my house, so beautiful day. A little chilly overnight, but that is to be expected here in the mountains at 7,000 feet. So, again, if it's your first time watching this brilliant financial breakdown of the day, please click on that subscribe button. It's probably down here, around there, maybe. I don't know. Give me some thumbs up, some likes, shares, all that good stuff. I would greatly appreciate it. And kind of a red day here domestically. I see a lot of green across the world. So looks like all of the day wasn't a total wash, but looks like a couple of places were in the red today. So maybe a lot of that steam that was pushing the stock market in a positive direction late last week after the GDP numbers came out, it may have actually run out at this point. So we shall see. All right, let's dive in. And eyes are tired today. All right, let's go ahead and dive into the numbers. The Dow Jones finished the day down 0.39 at closed at 32,732. The S&P 500 was down 0.74, closed at 38.72. NASDAQ down 1.03%, closed at 10,988. Small caps were basically flat at down 0.04. The VIX was up 0.5% today. It's currently at 25.88. Canada was down 0.23. Brazil up 1.28%. Mexico was up 1.73%. Jumping across the pond, Germany basically flat at up 0.08. UK was up 0.66, France down 0.1, Euro stocks up 0.13, Netherlands up 0.46, Spain up 0.51, Italy up 0.55, Switzerland up 0.52, and Portugal came in up 1.07% for the day. Both Russian markets were red, barely. The MOEX was down 0.05, and the RTSI was down 0.19. The Asian markets were split. Japan finished the day up 1.78. Australia up 1.15. New Zealand was up 2.24. Looks like most of the Chinese markets were red last night. The Shanghai was down 0.77. The SESE component down, basically flat at down 0.05. China A50 down 1.27. DJ Shanghai down 0.59, and the Hang Seng down 1.18. Taiwan weighted came in the positive at up 1.26%. So, like I said, kind of a mixed day. Looks like China had a rough night, and but most of the globe was in positive territory. Eating a Snickers earlier, and I got peanuts in my teeth. Yuck. All righty. Well, let's go ahead and read through the weekly economic update for this week. The week on Wall Street, stocks overcame poor earnings results from some of America's largest companies to post gains last week as investors cheered positive earnings surprises, easing inflation, and a rebound in economic growth. The Dow Jones rose 5.72, the S&P was up 3.95, NASDAQ was up 2.24, and internationals were up 4.89 for the week. A spooktacular week. Some mega cap technology companies were under pressure last week on weak earnings and tepid fourth quarter guidance. They reported multiple headwinds, including declining advertising revenues, loose expense control, and a slowdown in cloud growth. Meanwhile, positive earnings surprises from old economy companies powered markets higher. This market bifurcation was evident in the divergence in the performance of the Dow Industrials and the NASDAQ. The S&P 500 posted a substantial gain despite its disproportionate weighting of mega cap stocks, which helped illustrate the power of the rally. Momentum accelerated into Friday, aided by an easing in inflation and a solid third quarter GDP report. Economic growth exceeds expectations. After two straight quarters of negative economic growth, the initial estimate of the third quarter's GDP came in at a solid 2.6, exceeding economists' 2.3% estimate. The surprising economic performance was largely attributable to the increase in exports, which narrowed the trade deficit, a development that may not repeat going forward. Particularly encouraging was the personal consumption expenditure price index, a report used by the Fed to track inflation. It increased 4.2%, well below the 7.3% jump from a quarter ago. All right. Economic data this week. On Tuesday, we have the Institute for Supply Management, or the ISM Manufacturing Index, job openings and labor turnover survey, or the JOLTS report. Wednesday, we have the FOMC committee meeting. It's the Fed is going to tell us what their decision on the rate hike, and the automated data processing, or ADP employment report. Thursday, we have jobless claims, factory orders, the ISM services index, and Friday, we have the employment situation. Companies reporting earnings this week. Tuesday, we have Pfizer, Eli Lilly, and Marathon Petroleum. Wednesday is CVS, Qualcomm, Fortinet, Humana, Cigna, Bookings Holdings, and Prudential Financial. Thursday, we have Block Inc., PayPal, Amgen, ConocoPhillips, and Regeneron Pharmaceuticals. And Friday, we have Dominion Energy and EOG Resources. So busy week on the calendar, and we'll see if the trend of pretty good earnings reports. I know Amazon came out last week and said that they were basically taking down their forward guidance, that for Q4 they'll have somewhere between 0 and 4, I think it was billion in revenue. So they took it from, I think they were at like 4.25, 4.5 billion was their previous estimate, and they just took it down. Said, we'll get somewhere between nothing and 4 billion. So we'll see what happens over the next few weeks and months with them. So I know I'm doing my part. I buy stuff from them on a regular basis simply because I live out in the woods, and it's easier for them to bring it to me than to make the 25-mile trip to the local grocery store or Target. All right. Next up is a white paper that's going out to people on my email distribution list. You can sign up. Just go to dsafinancialgroup.com. You can ask to be added to the newsletter list, and you will get everything in your inbox. This is a new retirement contribution limits for 2023. I know I covered this probably in a daily video, but want to go ahead and go through this real quick. What changes are there? For IRAs, IRA contribution limits are up $500 in 23 to $6,500. Catch-up contributions for those over 50 will remain at $1,000. So if you're over 50, you can put $7,500 into an IRA. Roth IRAs, the income phase-out range for Roth IRA contributions increases to $138 to $153 for single filers and heads of households, a $9,000 increase for married couples filing jointly. Phase out will begin at $218 to $228, a $14,000 increase. And married individuals filing separately will see the phase out begin at $0 to $10,000. Workplace retirement accounts, those with 401ks, 403bs, 457s, and similar, will see a $2,000 increase for 23. The limit raising up to $22,500. Those over 50 will now have the ability to contribute an extra $7,500, bringing their total limit to $30,000. Simple accounts, a $1,500 increase for 23, giving individuals contributing to this incentive match a $15,500 stoplight. Other changes, in addition to changes in contribution limits, the IRS also announced several other changes for 23, including an increase to the annual exclusion for gifts to $17,000 per person, and an increase to the estate tax exclusion threshold. All right. Now, keep in mind, talk with a tax advisor before making any permanent decisions, but these are the new limits that are out there for everybody. All righty, let's go ahead and jam through the market recap for today. S&P 500 slips on tech wobble ahead of Fed meeting. The S&P 500 fell Monday, pressured by weakness in tech, with just days to go until the Federal Reserve is expected to deliver another jumbo-sized rate hike. Slow down. It's not jumbo size. It's 0.75%. It's not outrageous. A 6% slump in Meta Platforms led the fall in tech after mostly disappointing quarterly results from big tech. Alphabet, which is Google, Apple, and Microsoft were down more than 1%. Falling semiconductor stocks also exacerbated the wobble in tech, following pressure from AMD, NVIDIA, and ON Semiconductor Corporation. ON Semiconductor Corporation fell more than 8% despite quarterly results that beat both the top and bottom lines and guidance that was in line with Wall Street estimates. Boy, they just can't win. I mean, you have good numbers, you do exactly what analysts are expecting, and you still lose 8% in your stock price over a given day. So the market is very finicky. Treasury yields, meanwhile, steadied after falling last week as investors look to the start of the Fed's two-day meeting on Tuesday that is expected to culminate in a decision to lift rates by 0.75% for the fourth consecutive meeting. You would think it is the end of days, the way these people talk about this. But the focus, quote, will be on what comes next and we expect Chair Powell to hint that the FOMC is likely to slow the pace to 50 basis points in December, end quote, Goldman Sachs said in a note. Paramount Global, meanwhile, fell about 4% after Wells Fargo downgraded the company to underweight from equal weight, citing worries about the company's linear business and uncertainty in streaming. Energy stocks sidestepped the broader market malaise after shrugging off a decline in oil prices as OPEC lifted its forecasts on oil demand in the medium and longer term. EQT, Coterra, and Schlumberger were up sharply, with the latter adding to gains from last week ahead of its investor day this week. Quote, while many agree with our view that the digital business and international business at SLB is best in class, there are questions whether investors can express the same view through peers that trade at lower multiples, end quote, Goldman Sachs added. In other news, Too Simple tumbled 46% after firing its CEO, Jadao Hu, amid a Wall Street Journal report. The Federal Bureau of Investigation and Securities and Exchange Commission were investigating whether this self-driving company improperly financed and transferred technology to Hydron. Ooh, I hadn't heard about that one. So, all right. Well, that's the day's news in the stock market. Let's go ahead and jump over to some news about the dollar. U.S. dollar rises as Fed likely doing another big hike and the sterling sinks. Dollar gained across the board on Monday, regaining some of the luster it lost earlier in the month, bolstered by expectations of another supersize rate increase at this week's Federal Reserve Monetary Policy meeting. That said, the dollar's gain would be limited if the Fed signals on Wednesday that the pace of rate hikes will slow as it assesses the impact so far of its policy tightening. Again, they haven't really tightened it that much. Rates are back to like normal pre-mortgage crash, and life was pretty normal in the 90s and early 2000s. So, I am sympathetic to the person who was in the middle of trying to buy a house and the rates just went up. I can feel for you. I've been in that situation where rates bounce around, and you have a very strict budget, and for the house, you want it, you're ready to go. Again, I am sympathetic, but we can see the damage that of having just obscenely low rates for a long period of time, and now we're having to pay the fiddler his tip, and it's going to be painful. All right. That said, the dollar's gained. All right. Sterling, on the other hand, was on the defensive against the dollar and the euro, despite market forecasts of another 75 basis point rate hike by the Bank of England later this week. The Fed is widely expected to raise its benchmark overnight interest rate by 75 basis points to a range of 3.75% to 4%, its fourth such increase in a row. But for the December meeting, the Fed funds have priced in on Monday a 55% chance of a 50 basis point increase, down from about 67% last Friday. In afternoon trading, the dollar rose 0.8% against the struggling yen to 148.62 for the month of October. The dollar was up 2.7%, on track to post its third monthly gain versus the Japanese currency. Quote, I think the dollar in general is consolidating. A lot of news has already been priced into the dollar, end quote, said Amo Sahota, executive director of FX consulting firm Clarity FX in San Francisco. Quote, if the dollar is to make new gains, I think it would be relatively marginal. Generally, the dollar is somewhere in the bin, trying to establish a high, but has not generally done so. Think there is an exhaustion in that trade, end quote. On Monday, Japanese finance minister said it spent a record $42.8 billion on currency intervention this month to prop up the yen. A steep drop in the yen to a 32-year low of 151.94 to the dollar on October 21st likely triggered the intervention, followed by another one on October 24th. The dollar likewise climbed against the Swiss franc, rising 0.6 to 1.0014 francs. The greenback, however, was on pace for a monthly decline of 0.5% in October based on the dollar index. This would be the first fall since May and only its second this year. Elsewhere, the Chinese yuan slumped after data released on Monday showed China's factory activity unexpectedly fell in October, weighed down by softening global demand and strict domestic COVID-19 curbs. So there's that. And they talk about some of the other currencies that are in the dollar index. My opinion on the dollar right now is simply that, it's the best of the worst. It's kind of like the tallest midget in the room. And, for now, the dollar is, the safest currency out there. But I mean, we've seen the devaluation of the dollar pretty significantly over the last 2+ years with all the stimulus and money creation from the Fed. And, no, inflation is not caused by greedy businesses, because if businesses were greedy, they would have been greedy before the inflation started. So it's simply a matter of too many dollars chasing too few goods, and the Fed being reckless with our currency. So, I mean, my long-term fear is that if the dollar collapses, what are we going to do? And, you better have your store of wealth and something that is going to survive it, something with, an asset that is, businesses that are going to keep on going, or, houses, cars, gold, silver, something tangible, because the dollar is not tied, it's no longer, there's not a gold exchange rate. It's not tied to gold or silver anymore. You're not getting anything for it if it falls apart. So that to me, that is the scary part. And I really worry about that long term. I think if anything, that is going to cause the civil war in this country. If the people in Washington destroy the purchasing power of people's money, I think that is going to cause the big problem here, not all these social issues that the left and right can't agree upon. All right, one last article here. Forget the $22,500 limit. Some workers can supersize their tax-deferred retirement savings up to $265,000 in 2023. So again, I'm not going to read through all of this. Just going to hit the high points here. But this, really applies to people who have second incomes or self-employed. And I always encourage people, have a side hustle, if you can fit it into your schedule, because you never know when, your current employer is going to be out of business, and, having that second line of income, which could turn into a primary line of income, if you play your cards right, could really help you out. All right, so let's go ahead and read this. You get to the bigger numbers when you're in a position of being both the employee and the employer for SEP IRAs or solo 401k plans, which are designed for those who file Schedule C for self-employment income. You can either defer up to the total limit allowed for both employee and employer, which will be $66,000 for 2023, plus the $7,500 catch-up provision. For cash balance pension plans, a type of defined benefit plan you can set up for yourself as a solo practitioner, the IRS says you can defer up to $265,000. Quote, not everyone can save more for retirement, but if you can do this, it increases the amount you can shelter, in quote, says Tom Balcom, certified financial advisor, who runs 1650 Wealth Management in Fort Lauderdale, and who uses the cash balance pension plan for his own retirement savings. So, and again, here they go through all the numbers again that we've already covered as far as how much you can set aside into your current plans that are available. So it's good info there. So, all right, well, let's go ahead and wrap things up for today. Hope everyone has a fantastical evening. And there's some baseball games on. Let's see here. Somebody has some. Oh my gosh, these people. All righty. So, but like I said, if anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Book a meeting, ask me some questions, or, if you want to, call me up, feel free to do so. But I hope everyone has a fantastic night, and I will be back tomorrow with the Liberty Call. So I hope everyone has a good evening. Bye-bye.